Since the start of 2025, the dollar has fallen by nearly 12%. And when we look back, every major decline in the US dollar has lined up with Bitcoin bull runs. In 2017, a sharp dollar decline coincided with Bitcoin's surge to $20,000. In 2020, the same dynamic played out again as the dollar fell, while Bitcoin surged to $60,000. Now, some will argue that the dollar has gotten extremely oversold here and is due for a bounce, which could trigger a sharp correction on Bitcoin, and that's a fair point, because no financial asset moves in a straight line. But if we zoom in on 2017, we see that the dollar had fallen by 11% in the first 9 months of the year. Then it saw a 4% bounce over the next 2 months. At first glance, you might expect that bounce to have triggered a pullback on Bitcoin, but instead, it lined up with the beginning of Bitcoin's parabolic ascent to $20,000. One possible explanation is that the bounce wasn't strong enough to really change the broader downtrend in the dollar. Liquidity conditions were still overall improving, and capital kept flowing into risk assets like Bitcoin. It was only when the dollar finally bottomed and reversed higher that Bitcoin topped out and entered into a bear market. It could be that we see something similar play out today. Because despite the possibility of a short-term bounce on the dollar, we're still of the opinion that it has room for more downside in an environment where the administration is trying to weaken the currency, and the Fed is easing policy without an imminent recession. When the Fed cuts interest rates, US yields fall relative to other countries, making dollars less attractive to hold. That puts downward pressure on the currency and eases US liquidity conditions. And it's not just the US dollar pointing to easier conditions. When we look at global liquidity, it has just hit new all-time highs after a brief consolidation. This is the same kind of backdrop we also saw during the 2017 bull run, right as Bitcoin went parabolic.